Iowa State Extension economist Chad Hart is our corn and soybean market analyst this week. The USDA says at this point in the growing season, the U.S. corn crop has been in better condition only 3 times since 1995. In 2000, 2004, and 2014. In 2000, the eventual yield was then the second best on record. In 2004, the final yield set a new record, and in 2014, the subsequent harvest set new tops for both yield and production, which still stand. Widespread heat set into a large chunk of the major U.S. growing region this week, the aftermath of which could be reflected in the USDA's next progress report. Ratings held relatively steady over the previous 7 days, as seen in Monday's most recent release. Chad joined us Thursday afternoon from Iowa, where 81% of corn and 80% of soybeans are rated good to excellent. We began by discussing the current status of crops across the country.
Well, as you're looking at the crop conditions that, USDA released Monday, we're still looking at a crop that's actually looking better than last year's crop for both corn and soybeans. As we look across the heart of the Corn Belt, going through Nebraska, Iowa, into Illinois, what you're seeing are crops that are 75 to 80% rated good to excellent for both corn and soybeans. So things are looking really good. When you look at the heart of the Corn Belt, we get a little weaker when we start to look at the fringes. But again, overall nationwide, crops look really good right now.
Do you think we'll see a big shift after this heat wave moved through over the past few days in a major portion of the growing region?
I don't really think so, and here are the reasons why. I think, we're getting this heat dome moving through, but it's actually a fairly quick moving heat dome, 2-3 days worth of extreme heat. But we also have a lot of moisture to work with, and that's going to help the crops, if you will, hold off that heat, survive that, and continue to look pretty good out there. So as I'm looking at crop conditions right now, I expect next week's report to look an awful lot like this week's report.
Well, the question then, was this the last hope for corn prices to move dramatically higher with a weather rally?
Not necessarily. I would say the next one we're watching for is going to be one that won't necessarily show up as far as withering corn conditions, but it's watching how hot the grain fill period is. Especially what I'm looking for here would be hot August nights. If we do get those hot nights, that tends to shorten the grain fill period, start to cut down on the yields, and we could see another weather rally based upon that.
And still a little bit of time if we would get something in soybeans?
Definitely there as well. It's August that really matters as far as the soybean crop is concerned. We're especially watching the moisture there in August to see how well those pods fill out.
Overall, what do you expect for crop margins in 2016-17 compared to last year 15-16?
As we're looking right now, the problem is both 15-16 and the new crop 16-17 crops are looking at negative margins. In this case, the corn margin has definitely taken a hit over the past 2-3 weeks. Where here in Iowa, I'm looking at estimates where we're down $100 to $150 per acre as I look at the corn margins. As I'm looking at soybeans, we're a lot closer to break even, but we're still on the negative side, down about 25 to 50 bucks an acre.
Those portions, or those farmers, I guess, that are seeing the biggest hit, is there a commonality among them? Do they rent ground rather than own it? Is there something that sets them apart?
Oftentimes you hit upon it. It's the idea that those that rent the vast majority of their land, those are the ones that are finding more financial stress out there. It's also the ones that have been more aggressive and growing over the past few years because typically you grew through renting more land. Yep, you're getting a little more financial stress there.
Let's talk about demand for corn. First in ethanol, how is it contributing to the demand picture?
Ethanol demand has been really strong over the course of 2016. In fact, looking at this week's petroleum report, we had the strongest ethanol production this past week than we've ever had. So record amount of corn demand, if you will, headed into ethanol, at least right now. And so that's been very strong. In fact, USDA has continued to ratchet that demand, strongly as we went through 2014, 15, and now as we look forward for the 16 crop.
How helpful have exports been?
Exports have been pretty good counter-seasonally. What we have seen this spring and early summer is stronger export demand than we usually have. Now this week's report was down a little bit. I would call it more like a normal report for this time of year. But as I look over the past 2-3 months, exports for both corn and soybeans have helped take prices higher early on and now are trying to help, if you will, hold prices from falling even further now.
And as for the final bucket of corn demand, what about feed usage?
Feed so far, it's been good but not great. The idea is that we know feed demand is building because we're looking at increasing meat production. Whether I'm looking at the pigs, the cows, or the birds, we seem to be growing more of them. So we are seeing growth in that feed demand, but we're also going to see a lot of competition as we're looking at, again, strong corn crop, strong soybean crop. I'm watching the wheat crop especially here because especially if quality is an issue in the wheat markets, we could see more wheat going into the feed market.
And how's the overall demand for soybeans?
Overall demand for soybeans is, again, very good. In fact, looking at USDA's estimates right now, it'd be at record levels. Exports have been very strong, especially over the last 6 months. And our domestic crush has been really good because we're looking at, creating that soybean meal for the livestock feed. But we've also seen some good demand growth on the soybean oil side as well, especially for industrial usage.
To close out with, Chad, what advice would you have for farmers that have stored grain left in the bin or are looking for opportunities to forward price?
Well, let's start with that old crop first. If we've got it in the bin, what I'm worried about is that we need to clear those bins out right away, because as I look at these crops right now, we're looking at very large production coming in this fall. We're going to need to store a lot of new crop, and so I want to get the old crop out of the way. So I am definitely looking to market that sooner rather than later. I'm especially worried about some basis erosion as we move from July into August, because I do believe there's a fair amount of grain, especially corn, still lurking out there in farmers' bins that's going to need to move. Now, as I look at the new crop situation, I'm going to say, given corn's decline over the past couple of weeks, I'm going to be willing to wait a little bit, look and see if we can get another rally here going into harvest time based upon those hot August nights. With beans, though, I would be a little more aggressive, maybe looking to market some new crop beans, because especially if I can get those marketed in, maybe look into a basis contract as well to try to lock that in. The idea is that I think there are some opportunities to move some soybeans right now.